Okay, hi guys. Welcome to the FX Street webinar. My name's Ian Coleman. I'm going to be your host for the next 50 minutes to an hour. I'm one of the traders and analysts at First Trading. Okay, we offer analytical reports on FX, stock indices, futures mainly, and fixed income for the 7 o'clock UK Open. Okay, it's not just an analytical report, it's also got trade recommendations. If you look at our website, we've got a reasonable profit and loss performance over the sort of last year. Company's actually been going 9 years. Okay. Today we're going to talk about time frame breakdowns. Okay, we're going to talk about basically what I look at. Okay, chart formations, candlestick formations, trend, extension levels from Fibs, pullbacks, and especially we've talked about whether or not we're in corrective sequences or impulsive sequences. Okay, so do we want to be trading the corrective sequence? Can the corrective sequence be deep enough to actually warrant an intraday trade, or should we stand aside and look for entry levels at pullback, relevant pullback levels? Okay, today's been a particularly good day for that, because also we had some decent dollar moves last week. We've since been consolidating or correcting. Okay, so we're going to look at those corrections. We're going to talk about trades that we got on today and forecasting where we expect these currency pairs to go in the very near future. Okay, we'll also, I don't know if anybody's here from last week. Last week we did some medium-term forecasts. So we're also going to talk about those medium-term forecasts that we did last week and see how they've performed, see where we should have got in, and hopefully where we got in to some of the trends. And we'll basically break down the 8 major currency pairs, talk about all of those, and then if we've got time, we can look at some of the crosses or even some of the indices, okay, just to try and decipher where these currency pairs could be going in the very near future. Okay, there's only a few in today, about 10 of you. I would appreciate if you can ask as many questions as possible. I'm not going to say it can be dull doing the webinars, but obviously if you're not getting any feedback, then sometimes I don't know whether or not people are sort of understanding what I'm talking about, and it's just nice to answer questions. Also, we're going to look at one symmetrical pattern that's quite relevant at the moment, I think, on cable. And at the end of it, if any of you guys want a printout of an A4 sheet where you can basically stick it on your wall in your trading room or in your spare room or wherever you do your trades from, then I'll post my email at the end, and if you guys want to contact me, I'll send that through to you. Okay, so to start with, we're going to start off with euro dollar. Just talk to you a little bit about the settings that I have. It's a normal candlestick chart. Okay, the yellow outlines on these charts basically highlight me to relevant pattern formations. Okay, sort of lazy man's analytical tool there. Okay, we've got a cloud formation that comes in. We've got some moving averages. Okay, exponential moving averages, which I basically use not for crossovers, but I use for a bias. Okay, so I use the exponential moving averages for a bias, and I try and trade with the trend. Okay, but I'm also wary of obviously when the trend ends. 2 RSI settings on here. We've got an RSI 8 at the top. An RSI 15 at the top. Okay, I'm basically not particularly bothered about oversold and overbought area, but what I want to see is the trend. Okay, so I want to see, it gives me a bias. It's under the 50 level, and the bias is to the downside. If it's above 50, then the bias is to the upside. The RSI 2 is more, I use it more for symmetrical patterns. So if I'm looking at a crab formation, a butterfly, a dartly pattern, then I want to see that in an overbought or an oversold territory. Okay, so that second RSI gives me a different reading, okay, to the normal RSI, and that's an RSI 8. Okay, and the last one is an ATR, which is the average true range. And in its rawest form, what I'm looking for there is I'm looking for candles that are out of the ordinary. Okay, so if I get a signal candle at an area of support and resistance on my shorter time frames, I want to make sure that that candle is sufficient, okay, that it stands out from the others. In other words, if the average true range at the time is 10 pips for the last 15 candles, I want that candle to be over 10 pips, okay, if it's a bullish or a bearish engulfing candle. So that's the readings that I've got on my chart, okay. So at the moment, we've got euro dollar up. Now, we're actually looking at the monthly chart at the moment. They're not to be ignored, okay. As we break down through the time frames, we can get a bias. We can know whether we're in a corrective sequence or an impulsive sequence. And we can do this from chart formations, we can do it from fib levels, etc., etc., etc. Okay. Now, obviously here we can see a large channel off the monthly, but we can also see an area of support here. Okay, and this potentially can form an ascending triangle formation. So we've hit the base, we're moving up off the base, and last month we posted an insider army candle. Now, an insider army candle is basically a show of investor indecision. Okay, so obviously the price action was to the downside. We hit this area of support, and then we posted this insider army candle. Now, the proper trigger for an insider army is a break of the outside candle. So you can obviously see this month that we've broken to the upside. But if we waited for that, then we're going to be a long way behind the start of the trend. And in fact, we might even be buying into the end of the trend. Okay, so we want to get a bias off that candle. So we've seen an insider army candle. We then want to break it down into shorter time frames to see whether or not it warrants shorter time frame trades. Okay, so we break it down from monthlies to weeklies to dailies, 4 hourly, and then also our intraday signals. Okay, let's just clear this off. So at the moment, obviously off the monthly chart, the bias is to the upside. Okay, so we've had an insider army candle and the bias is to the upside. And that's what we want to look at in trading. We want to look at the bias. What is the long-term bias? What's the short-term bias, etc.? Is it corrective? Is it impulsive? Blah, 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 blah. Okay. Here we can use our fibs. So to start with, okay, we got an extension, or we got an aggressive turnaround off the top of this trend. So remember, we saw the trend channel on the monthly, and then breaking it, which also goes to an outside bar. We break it down to the weekly, and again we get this outside engulfing candle. So there's only really two candle formations that I really want to see: an outside bar or an insider army. Okay, and they're good signals of a change of investor sentiment. Okay, and it's investor sentiment trend that we want to be looking for. Now, a particularly good entry point, you'll see these purple dotted lines across the center of an outside bar. Now, it's called a Marabuzzo level. Okay, so you take the high, you don't take the high, you take the open and the close of the bearish engulfing or outside bar, and then you take the 50% level, and that then becomes an area of resistance. Okay, so we can see this was our Marabuzzo level coming all the way back to 2nd of May. We move up, hit it, move up, hit it again. We form a bearish engulfing candle, and then the bias again is to the downside. Then we want to be looking to our fibs. Okay, so we're then looking to our fib extension. So we've got our first swing low. Okay, then the pullback, then the aggressive sell-off again, impulsive. Then we want to be looking down to 261.8%. Okay, and this lined up with this area of support. So we had this area of support that we previously noted, 122.05. Then we overextended, literally to the pip. Okay, 120.33 was 261.8%. You can see that the low of this candle was 120.42. Obviously off a weekly chart, when I'm saying it's virtually to the pip, 10 pips here or there. You know, we're not going to argue too much with that analysis. Then we get an outside engulfing candle again. We've already noted 122.05. Okay, so we've got our outside engulfing candle, and at that point, we've got a very good reason for a change of trend. Okay, we've got support, we've got an outside bullish engulfing candle, and we've got 261.8% extension. Just bear with me one second. I can get a drink of water. Now, from that point, we should then be looking, okay, at bullish signals. So this was the week, the 23rd of July. We then break it down to our daily time frames. And this pattern here, okay, this first swing gave us our bullish engulfing candle. This is then our support at 122.05. And basically in shorter time frames, this is also going to be the Marabuzo. Okay, we want to be looking for buy signals around that level. Now, this may be a corrective. Which swing did you use for the lowest 261.8%? Hold on 1 second. Keep my right time frame. Here, okay, off the high, which was 149.44 to this low here, which is 138.37. Okay, let's get rid of that. Let's clean that up. Get back to the daily. Okay, so then we've got this bullish bias. Okay, we note to the short-term chart, or this compared to the time frames that we're looking at, it breaks the high, so it's then making higher highs and higher lows. And at that point, we want to be confirming and looking still for bullish signals. Okay, I then move above, or I break the 50 level. Okay, all these time frames on both the RSIs around here. Now then, my moving averages, because my bias has changed, my moving averages then become my support and resistance. Okay, I'm not really, I mean, I do use trend lines, obviously. Let's just clear that off. And we can see here, okay, that we get a decent dip off this trend of higher lows, and then again we get another bullish engulfing candle. The next day comes back to retest the EMA, okay, our moving support and resistance, and then we push to the upside. Now we had a bit of a stall, and it was just before the 161.8% extension level. Got to remember, this at the moment is a corrective sequence. Okay, it could potentially move a lot higher. Excuse me. And possibly in the three wave pattern. We've had 5 down, so then to look for 3 up. And these corrective sequences can be the hardest to forecast, because they can stop short 261.8%. They can overextend. But what we have got to do is we've got to keep on buying dips. Okay, until the trend basically tells us that the trend is finished. Okay, so we keep buying dips. okay, and pushing up. Friday, inside a army candle. I forecasted this, so I've got my 260, I've got my Fib extension levels, and I've forecasted this up to here, okay, 129.49. Now, we've obviously got a previous area, just trying to get my pencil to work again, okay, the previous area of support here, oh sorry, I should say resistance, okay, so it's broken the previous area of resistance, it then has come back to retest the area of support, okay, because it was resistance, it now becomes support, so it breaks through that aggressive bullish price action that we had on Friday, okay, then comes down, we want to leave that trend on, that trend line on, and then that becomes our support level, so it's 129.47. Remember, we've gone inside of Rami, so there's caution there, but there's no technical reason why this trend can't continue. To break or to confirm a downtrend, we'd have to hit or take out the bottom of this candle, and we're obviously a long way off that. So the bias is still to the upside. If she does break this candle formation, then we want to readjust this channel. So we've got this channel in at the moment, which I'm just going to highlight a bit better. Let's just change the colour to start with. Okay, so that's our channel. So what we're looking for is a move up to 129.49-ish. Okay, and a move back down in a choppy formation, and then we've potentially got a bullish head and shoulders formation on the daily chart, and the bias will still be to the upside, okay, because we won't have broken, or I don't think we will have broken, the 50 levels, okay, as we retrace back down. So it depends where this finishes. I mean, we are in the sort of last throes of this uptrend, okay, it depends where she finishes. If she finishes around here, then support's going to come in at this level, which is 125.89, okay. If we pull back from the current trend, which I don't think we will do, okay, then we need to adjust our retracement level, and then it comes in at 124.42. Now, if we got a decent reversal candle off here, that's worth a short. You know, if we don't get involved in this short trend, this correction, then we could be sat on our hands for quite some time, because, you know, that's nearly a 400 pip move to the downside. But at the moment, the bias is to the upside. And I'm just going to show you how we got our long trade on today, which we're now out of. Let's remove that. So then we're breaking it down into shorter time frames again, okay. Now this morning, impulsive move up, okay. A lot of chart packages will have what they call a percentage indicator on it. This is a professional package called C2G, and believe it or not, it hasn't got one on there, which is, I find quite surprising. But what you can do, you can draw a line, basically, on your uptrend, and then it will give you a percentage or an angle of how strong that uptrend is. So you can see here, I mean, you don't need a tool to do it really. You can see here how aggressive the move up was, and then the move down. It's not going to move down, is it? Really? Okay. It then gives us another chart formation, and the chart formation is an expanding wedge. Now, an expanding wedge formation has a bias to break to the upside, but unlike an ascending wedge formation, okay, so we get an ascending wedge formation. Ascending wedge formation is quite easy to dictate where it's going to break, because we know that we're winding up, and the closer we get to the end, we know at some point it should break to the downside. And notice I say should, because all technical analysis is about having a bias, okay? So we know if we see a wedge formation, we've got a bias to break to the downside, about 70%, 65, 70% bias to break to the downside. So it's worth to start taking shorts off the top of the trend line if we get short-term signals. And by that I mean 1 hour engulfing, insider armies with confirming, even breaking it down to sort of 15-minute, 5-minute time frames, because you can get your risk reward very good if you're taking it off that top trend line, okay, with a signal. So the expanding wedge formation is obviously a lot harder because you've got more room to breathe, okay, and there's nothing to say that it's not going to just keep on expanding further down until it eventually breaks to the upside. So this morning, we basically noted this expanding wedge formation. We also noted break level here. Okay, so we bought the break. We actually got out at, what was it, 128.18. We took it off the high. Okay, I mean, the bias is still to the upside, but most of our trades get closed at 1 o'clock. Okay, so if it runs through 1 o'clock without hitting the stop or target, then it continues till 4 o'clock. But these are intraday trades, okay? So we hit our first target. At 1 o'clock, the balance is closed, excuse me. So the trade for us this morning was buy here, okay, around 127.47, or buy the break, because we want to trade with the bias, okay? And the bias is to the upside. Obviously, we've got a very decent engulfing candle. I didn't even look to short time frames to see if we can have a look now to see if we've got any bullish signals off the cloud. Let's have a look. There's none there on 5 minutes. And I only use 5, 10 or 15 minutes. 10 is an insider army. 15 isn't really anything either. So it wouldn't have really been sufficient for me to have bought around this base level. Okay. But we did get a trade on. We've taken some off. Happy days. Any questions about where I'm coming from, basically, with regards to the bias, with regards to the long-term signal, with regards to obviously focusing on target levels. And in my personal trading, basically what I try to do is I try to build in small. So I'll take some signals in my shorter time frames, and it's not until the chart either shows me that I'm on the wrong side of the trend. In other words, I move back below the 50 RSI, I get a bearish engulfing candle, I get an outside bar on the daily, or I hit a relevant trend or fib extension level, that my bias changes. Okay, so I'm continuously trying to trade with that bias. I mean, we've been quite lucky this morning, really, because the dollar's virtually moved in one direction on the 8 currency pairs that are in our major package. So when everything lines up, when everything's correlated to move virtually in the same direction, then it makes our job a lot easier. Then we just have to look at sort of euro yen, euro sterling to try and get a bias on those two pairs. Okay, so that's any questions about euro dollar before we talk about breaking down some time frames on the other 8 currency pairs or majors that we're talking about today? No? Okay, just switch the cam off for a minute, otherwise we'll lose the chart. Okay, this looks a bit messy in here. I'm going to take all the studies off and we can put them all back on. Then you'll understand where I've come from. There's a fair few to put on. Okay, at the moment, large time frame, this is rough. Okay, but an upward bias in a symmetrical, virtually symmetrical triangle formation. So this, believe it or not, does have a bias to break to the downside eventually after a strong move down. So we've moved up, we're gyrating, we're making lower highs and we're making higher lows, okay, as it consolidates. Okay, weekly. Well, again, you don't really need to be too much of a rocket scientist to see what she's been doing. Inside a Rami candle, off the triangle base. So this is our warning point, okay, and we can virtually start taking highs or shorter time frame bullish signals from there. Notice it actually reacts off the EMAs, okay. So again, it's like I wouldn't say my system. What was support becomes resistance. Okay, we saw that earlier on, and it works with the moving averages as well. Okay, as it breaks through the moving average, what was support then becomes resistance, and vice versa. And we can use that to our bias. Okay, trying to get our bias yet again. So here, spikes have been, or dips have been bought into, okay, into another inside bar here showing sort of indecision. There was actually three inside bars, okay, as she sort of tried to break into the weekly cloud cover. Now, in last week's or the week before, I can't remember which one it was. It would have been the week before, actually. We talked about this pattern. Okay, so we had resistance. It was coming in quite strong. Okay, and then we had dip buying. And this formed an ascending triangle formation. Now we know that, again, talking about chart patterns, the ascending triangle formation has a bias to break to the upside. Now, the actual target level for an ascending triangle formation, we take the base, which is here, we take the area of resistance, we take the longest point, and then we project that from the break point. And that actually comes in, I know because I've got it on my other charts. Okay, that actually comes in at 162.29. So up here, okay, which is obviously a previous area of resistance. So we've got that bias, but, and this is the big but for the cable, okay, we're going to break it down again. Okay, and then we're going to start plotting some fib levels. Okay, so we've got this swing, if you like, the pullback. This then supports the pair, okay, after a three-wave correction. Then very choppy inside the triangle formation. Then a breakout. Then a comeback to retest again, not just the breakout level, but also our moving average. Okay, sorry, let's try and get that. Okay, so this obviously pullback. So we bought off the trend, okay, and symmetrical pattern. There's a bit of resistance up here near the cloud, which we're going to talk about in a sec. So we'd like things to line up as well, okay. If we can get fib extension levels with cloud resistance, etc., we can obviously see here, okay, where the cloud reacted. So it reacted to the cloud. The cloud is now very thick to the outside, and that basically shows us that there is a lot of resistance for cable to push into the cloud. And we've got some cloud resistance coming in around here, okay, around 162.29, just below that actually, about 162 the figure. So we know there's an area of resistance there. Okay, we then break it down through time frames. Okay, weekly, as I said, inside a rally, breaks to the upside, hits the moving average, comes down, and then we form our first swing low, and then this trend acts as support. Okay, as we gyrate with volatile price action inside an ascending triangle formation. So we've got our resistance level near the top of the cloud as well. Okay, so we've got our resistance level inside a rami here, pushes to the downside, uses the trend as support to the upside. Okay, turns positive here. Okay, so around about this level. Okay, then we get a bearish outside bar that takes out both of our moving averages, and then we break to the upside. We break to the upside and we reject 127. Now, those of you that I'm quite fanatical about fib levels, okay, and 127% makes up a lot of symmetrical patterns, okay, so you've got to be wary of 127, but you've also got to be wary of the trend. So we get a reaction off 127, but the sell-off is not strong. Okay, if that was a proper symmetrical pattern, then the downtrend should be aggressive. Okay, so it's got to make at least 61.8% of the formation to the downside. And what happens is we basically got our symmetrical or our ascending triangle formation. Okay, what happens is we come back to test what was resistance here, then becomes support here. And it not only becomes support, but we've also got our moving average, okay, which is holding this upside bias. Now, as I said, but you can see the charts, okay, to forecast the triangle breakout, we take the longest point, so the low, and then the first resistance level, and we project that up from the break point. So as far as the symmetrical triangle, the ascending triangle formation is concerned, then 162.29 should be the target area. So we still have a bullish bias on this pair, but, and this is where we started plotting the fibs. Okay, so we get a fib extension tool. Okay, and then we want to make a note of this level. Okay, 161.8%. Not going to have too many things on here so we can't understand what we're looking at. So that's a resistance level. We then take a fib retracement tool, which we've got a 78.6% setting on. We then take it from the high down to the low, and we want to note 78.6 because a bullish Gartley, okay, will project to around that level. No, I don't use 70.7. No reason why you can't. I'm careful not to try and overcomplicate my view, because if I do, then I'll have too many reasons why not to trade. If you sort of see where I'm coming from, I want reasons to get involved, not sort of. If I put too many oscillators, indicators, I mean my charts are pretty crowded anyway. But if I put too much more on there, then I'll always have a reason why I think the trend is going to change, and I'll always be looking for reversal patterns instead of continuation patterns. So I try not to overcomplicate. Okay, so then I want to note here, and notice how it's very, very close to the 161.8% extension. So I'll then remove that off, and take this off. from here. So I've potentially got a bearish Gartley coming off around 160, coming off around 161, the figure 160.81. I think I've actually forecasted it to be at. So I'm still bullish. Excuse me. There is nothing in my chart formations, in my candlestick formations, to tell me that I shouldn't be bullish. What have we got here? What did we talk about earlier? Okay, this RSI 8. Okay, the RSI 8 is showing overbought again. Okay, haven't really got any divergence yet, but it's a warning signal that this trend, this upside movement, could be faulting around around 160.81. Sorry. Okay, so let's just remove all this off. Okay, so then we get to our shorter time frames. So we then want to look at price action that has been forming. We want to decide where support and resistance is, whether or not we're buying off decent support in the morning, whether or not we should wait and buy a pullback, and obviously what our target levels are, whether or not our risk reward warrants calling an open trade. And again, just pulling off some Fibs. So not a great retracement here, but note again, decent pullbacks to trend. The trend is up. Remember the RSI at the top that we're really using to get our bias. The other one's only for symmetrical patterns. Okay, keeps on basing and hitting the 50 as we move higher. Okay, did break this yesterday, but the bias is still to the upside. This move here, okay, from high to low, we've got this 161.8. Okay, we're just going to move that off again. Okay, and then we take the swing from here. Okay, we want to see bullish price action around 38.2. It's actually around 23.6 or 38.2, but normally in choppy price action, it will get down to 38.2. So with hit trend support or on moving average support, I actually bought some in my PA account off here yesterday. Okay. And then, as long as we continue to make higher highs, okay, the bias is to the upside. Yes, we're having a pullback at the moment off the previous high. So it's obviously stops put in place here. People are looking for a double top formation, etc., etc., etc. But the bias still remains to the upside. So we're going to get an insider army candle forming this out. Okay. We then look again back to our fib extension, because we want things, as we said earlier, we want things to line up. Okay. Where's 261.8%? 261.8% is 161.12, and we've got our barrage, okay, of resistance levels or symmetrical patterns or whatever you want to call them. Okay, we've got them around here. Now, if this is the last leg higher, it will be choppy. Waves can overlap each other, okay, because basically people are getting out of long positions, and smart money might be starting to build short positions, okay. So this is what I think at the moment our last leg up, okay. I just note extension levels on here as well. So this is sort of the zone, if you like, or you don't really want to, or I don't particularly want to be long past. Okay. Any questions on cable? And dips, okay, which we should talk about, because most of us are going to be looking at intraday trades, because most of us, it's nice if we can get an intraday trade on, and then we can take some off. Like I said before, what I have a tendency to do, especially if I don't get a really good signal, if I get a good signal, I'll buy 2 units minimum. I'll then look to get 1 unit off and bleed another unit. When that other unit then becomes in profit, normally about 30, 40 ticks, I will then look for pullbacks to buy in another unit. Okay, so trying to build on my view as I go up, but not increasing my risk, because I'm using the points, or I'm using the gains that I've already got to try and build up my amount, or my outstanding exposure to the market. Okay, and basically at that point I'm just looking. I don't remember where I bought I'll tell you where I bought the second unit this morning. I got one in at 159.69 yesterday, which is off here. Okay, and then one in at 160.18, which I think was around here. Okay, so trying to build the bias back up. And all I have a tendency to do in the daytime is just note areas of support and resistance, because that's what trading is basically. It's areas of support and resistance and whether or not they can be broken. I then get down to shorter time frames, and I want to see reactions around these areas of support and resistance. Does it stall? Does it spike through? Do I get inside bars? Do I get engulfing bars? And we can see off this 5-minute chart, excuse me again, that, you know, there's an area of consolidation where the market isn't quite sure if it can push it through. These lines, just to digress a little bit, okay, same calcs as well, called market profile. So market profile charts basically show you the two main concepts of a market profile chart is a value area, okay, and a point of control. Now, the point of control is where the majority of the day's trading has been, okay, and the giveaway is in the name, okay. It's a point of control. It shows where smart money, and this is talking about bank money, are happy for that currency pair to trade at. So if it goes below the point of control, then smart money will sometimes buy it back up towards the point of control. If it goes above the point of control, then smart money will sometimes take it back down. But market profile as well will show you, obviously on an uptrend, that the points of control increase. Okay, so obviously from day to day, the point of control increases. I wonder if it will show you the point of control for yesterday. Yeah, so this is the point of control from today. This is the point of control from yesterday. Blah. And basically you want to be looking, I mean, if you've got market profile, you want to be looking at these areas of points of control, see if they line up with your other areas of support or resistance, okay? So get an area here, and the green line and the brown line is called the value area. So this area here is where 70% of the day's trading has taken place, and the market will have a tendency to trade within that value area until it breaks out and has a decent breakout. And you can see at the moment we've got an engulfing candle off the top, and it's started to pull back off this previous resistance level. Okay, so I said short-term bullish, and then we'll be looking for reversal signals to get short. But at the moment, the bias is still to the upside in cable. And we did call this up yesterday, last Tuesday. So what was that? 1, 2, 3, 4, 5, 6, 7. So we were around here, and we called it higher last week. And our medium-term forecast is still to the upside. Okay, so that's cable. Excuse me. A good one at the moment is Aussie dollar. So let's think about our bias. Okay, so we've got our dollar bias. Now, our dollar bias is still negative. So we're buying other currency pairs or selling against a bearish dollar bias. Okay, so we've always got that in the back of our minds because, okay, we've got our cross currencies. We've got our euro, Aussie, euro sterling, euro yen, etc., etc., etc. But the majority of the currency pairs that we're going to trade that have got tight spreads, because that's obviously what we want, have that dollar denominator in there. So if we can get our dollar denominator correct, and we can forecast all our different sort of currency pairs to give us that bias, then that can be half the battle. So cable looking like it could exhaust pretty soon. Euro dollar looks like it's got a little bit more legs in it. Okay, so then we want to look at Aussie dollar, one of my favourite currency pairs. And get rid of all this. Okay, what is it? Well, it's one hell of a rally. And this is the monthly, and you can't see it, can you? Sorry. Okay, so this is the monthly. And we're in a symmetrical triangle formation. So, can be seen as a flag. Whoops. Wrong tool. Okay, could be seen as a flag formation. That is a bias to break to the upside. I'm not sure. Symmetrical triangles, it gives you a slight bias to the upside. Symmetrical triangles can be very hard to trade, okay, because you get that choppy trading within the triangle as she squeezes, okay, towards the end. So we take note of that. We then come down to our weekly. What did we get? Well, we've got an evening star formation, which is a very bearish formation off the top. Where was a decent level to look for shorts? Well, it was half of the bearish candle. Okay, going back into shorter time frames. So that signal should have given us a bias on the daily chart to look for reversal candles, or continuation candles, I should say. So that formed our evening star, okay, with the doji in the middle, okay, and then this was our area of resistance. What happened? We moved up, and then we had a very strong, it's actually an evening star formation according to this, I don't think it is, but computerized chart patterns. Okay, they then moved to the downside. Talking to one of the guys in last week, I was just wondering if he was in the game today, and we were talking about the fact that we wanted to buy it off around this previous low. And the reason for that is that we had some fibs. So again, we're trading with the trend, but we're also extremely wary of when the trend is going to end. Okay, so we've got our extension tool. I can't remember where we took it from actually, was it there? Okay, and then we were looking for support around here. Okay, now obviously came in with this. So we've got an area here where we really don't want to be outstaying. I think it was you, wasn't it? Sorry, because just because this is recorded. FX Vint. And we were talking about a bullish bias, okay, once we got down to around this level, and well done. And it was good trade. It was, but do we want to stay? Are welcome. Again, dollar bias, which we're talking about. Okay. It could push a little bit higher. We're engulfing today. We actually bought Aussie dollar from the open this morning. Because of this, we've got an outside bullish candle. We've got a very strong day yesterday, on Friday. What was the day before? What was yesterday? Well, it was just a mild correction, really. Where's the Arami? Oh, the Marubozu level. Well, it's here. Okay. Where's our support? Well, it's around the same level. Okay. Where's the RSI? Well, it's about here on the 50. So, any reason to short it? Not really. At the moment, I've got to have a bullish bias, and I've got to be targeting towards this sort of level, okay, to form potentially. And at the moment, that's all it is, okay. We still need signals off it, okay, to form this head and shoulders formation. Remove all this. Okay, where's 161.8? Where's 0.618%? Well, it's here. Okay, 104.46. Where was our trend channel? Not a million miles off, is it? So, a great area to take longs up to. Again, short time frame. So what we were talking about this morning, what is the subject that we're trying to lecture on? We're trying to lecture on target levels. We're trying to lecture on support and resistance. We're trying to lecture on whether or not you should be buying into the correction or selling or actually going with the correction lower. And we're talking about reversal patterns. So again, this morning, if you'd missed the off, which was for us was at 7 o'clock, okay, it's just a channel. It's just a corrective channel that has a bias to break to the upside. I mean, we're very lucky. We got some decent price action at the off at 7 o'clock and formed a bullish outside candle, but. And there's obviously the big but. We won't be outstaying our welcome because up here, at another 40, 50 pips, okay, is the area of resistance. Once we get up towards that area of resistance, then the same as FX Vint, we'll be standing aside, waiting for patterns to confirm and that the bias has changed. But we won't jump in. We won't just start selling it because it's there, because this is a potential flag, and a potential flag formation could ride a hell of a lot higher. So it's all about trying to read the chart, okay, trying to, let's just put it on 240 minutes, okay, trying to read the chart, trying not to outstay our welcome, trying to lock in profit, and not just pull the trigger because it gets to a relevant support or resistance level. If we do that without a signal, then we could be in serious trouble, and the trend could quite easily continue. Now, a flag formation here, you take it off there, it could get all the way up here. 105.22. I don't want to stop of that sort of magnitude, even if I am in small. So, like I said, short-term bullish, gets around that sort of area, start waving the flag basically. There's nothing wrong with banking a profit. There's nothing wrong with banking a loss, as long as you have an area where you basically say to yourself, right, if it goes under that area or over that area, that's it, I'm out. You've got to work out your risk reward before you take the trade. It's got to be ample for you to be able to do it. If you've got a swing low that you quite like, you can buy obviously above that swing low and build your trade higher, but don't move your stop losses. Don't outstay your welcome. They're probably the two biggest points of advice I could probably give you. Okay. Have we got time for another one, Vicky? I know it's 3 minutes to 1. I don't know if we've got to wrap it up. Well, until I'm told to go, I'll have another go. Aussie dollar CAD. Ooh, shame. Yeah. Okay, monthly. Trend of lower lows for monthly trend of lower lows. Okay, so we've got 4 reversals, or not reversals, we've got 4 negative monthly performances up to now. Okay, 11th of September. We've got trend channel support coming in around here, okay, which is 97.38. This was a previous support level. It was also 61.8% of the move up. So the move up, came down, hit previous support, 61.8%, moved up, formed a channel. Okay, the bias is now to the downside. Weekly, we can see the channel a lot better. Okay, so yeah, I think you're probably right actually. As that dollar bias switches, but at the moment, again, we've got some things that line up here. This is trend support, which we've just been told about. Okay, this is 261.8%, and this is channel support. So again, talking about the bias, the dollar bias, very limited downside or further downside as far as I'm concerned. Okay, that's it, guys. We've got to wrap it up. If anybody wants, let me just clear this. If anybody wants that Gartley A4, okay, feel free to send me an email. Okay. Okay, I hope you've enjoyed it. I hope it's been an insight. Best of luck with your trading, and I hope to see you all again next week. Okay, guys. Thank you, and bye.